Welcome to Byte-Sized Tech, where we connect the dots on the biggest stories shaping our digital world. Today, we're chasing down a single force that's sending these massive trillion-dollar ripples across the entire tech landscape, from how companies are even funded to the very tools we use to create.
So here's our game plan. We're going to follow the money and the momentum, tracing the incredible ripple effect of AI. We'll start with the kind of wild financing at its core, then see how all that power is changing creative work, how it's affecting other parts of the tech world, and finally, how it's forcing entire governments to write a whole new playbook. Let's dive in. All right, first up, to really get what's happening with the AI boom, you gotta follow the money. And right now, we are not just talking about big checks. We're talking about a whole new level of creative finance, designed to fuel a demand for computing power that is, frankly, almost unbelievable. And this quote right here, it just perfectly nails the stakes. This line from Bernstein analyst Stacy Razagon paints the AI investment craze as this all-or-nothing bet. The money is so huge, the ambition is so massive, that it feels like there's just no middle ground. It's either boom or bust. So how is all this getting funded? Well, you've got this fascinating concept called circular AI investment. It's kind of brilliant, actually. It works like this. A tech giant, let's say Nvidia, invests a ton of money into an AI startup. Then that startup immediately turns around and uses that exact same money to buy billions of dollars worth of chips from, you guessed it, Nvidia. It's this self-feeding loop that concentrates a ton of power and ties the fates of these companies, the giants and the startups, super close together. And the scale we're talking about here, it's just mind-bending. Check out this number, $20 billion. That's how much capital Elon Musk's xAI is raising. But not for engineers, not for a fancy HQ. Nope. This is just to buy the GPUs for one single data center. It's a cost that's almost impossible to wrap your head around. So you're probably wondering, how on earth do you raise that kind of cash without drowning your company in debt? Well, this is where Wall Street gets really clever. Instead of buying this supercomputer themselves, xAI's investors create a totally separate company called an SPV. That company is the one that takes on the $20 billion in debt to buy all the chips. Then xAI just rents the chips from them. It's brilliant, right? The massive debt stays off xAI's books, and the investors get paid back over time through the lease payments. It's kind of like getting someone else to buy you a factory, and you just pay them rent to use it. So what's the big takeaway here? The financial wizardry behind the AI boom is every bit as innovative as the tech itself. But this tangled web of debt and investment also means that if just one of these big players stumbles, the whole house of cards could feel it.
Okay, so that's the massive, complex financial engine. But where does all that horsepower actually go? Well, the first big ripple hits the creative world. This is where AI moves from the abstract world of finance to completely rewriting the rules of how people actually work. Just think about the last time you had to make a complex flowchart, the old way, painfully dragging shapes around, trying to get the arrows just right, spending hours just on the layout. Well, now, with tools like Figma plugging right into ChatGPT, the game is totally changed. You can just describe the diagram you want in plain English, and boom, the AI builds it for you. It's making visual brainstorming something everyone can do, not just designers, and it lets you try out new ideas ridiculously fast. And listen, this isn't just some small incremental improvement. The CEO of Figma himself, Dylan Field, basically said this changes everything. It's not just about saving a few hours. It's about expanding the size of the problems you can even think about solving. You're freed from all that manual grunt work so you can actually focus on the big ideas. And if you want a jaw-dropping example of what that means in the real world, get this. The CEO talked about building this giant tech tree diagram. What used to be a full 24-hour project of tinkering and arranging now takes him about 30 minutes with the new AI tool. That's not an improvement, that's a revolution. When a wave as big as AI comes through, it creates some strange currents elsewhere. While everyone's focused on AI, other parts of the tech world are fighting completely different battles. Let's take a look at the electric vehicle market, where the fight isn't about AI, it's about price. So Tesla recently lost a key $7,500 tax credit on some of its cars, which is a big deal for buyers. So what's their move? They've rolled out these new, cheaper base models. But as you can see, that lower price tag comes with some real trade-offs. The new Model 3, for instance, gets you less battery range, and it's a bit slower.
The cheaper Model Y loses nice-to-haves like the screen in the back and the cool ambient lighting. It's all a strategic play to get those sticker prices down. So where do these new prices actually land in the grand scheme of things? This chart really puts it in perspective. At $37,000, the new Model 3 is way below the average US car price of $48,000, which is great, but it's still $10,000 more than competitor EVs that are coming in around $27,000. The battlefield is getting really, really crowded. And really, that's the bottom line here. These stripped-down models, they feel like a stopgap, a short-term fix for the lost tax credit. The much bigger question is whether Tesla can finally deliver on its promise of a true, next-generation $25,000 car. That's what they'll likely need to really win the mass market. All right, from electric cars, let's jump over to another corner of the tech world where the biggest roadblock isn't technology, it's Washington, D.C. After a ton of forward momentum, the crypto world has suddenly been slammed into a state of, regulatory limbo. And the reason for this sudden pause comes down to one stark number: 90%. Because of the recent government shutdown, that's the percentage of staff at the SEC and the CFTC, the two most important agencies for crypto, who are sent home. Essentially, the regulators just turn off the lights and went home. So what does that actually mean? It means all that crucial routine work, like approving new products, like the much-hyped Solana ETFs, it's just frozen. It's a short-term problem, for sure, but it's a huge reminder of how much the industry relies on the government just to do its job. The crypto markets are open 24/7, but progress is on hold because the regulators are, quite literally, out of the office. Okay, for our last stop on this journey, we're pulling the camera way back to the global stage. Because that AI boom we started with, it's not just a race between companies anymore. It's a race between countries. And governments all over the world are scrambling to figure out how to win. The UK, for one, has a very clear playbook. And this quote from the UK's AI minister, man, it says it all. It's time to put risk on. This is not about being cautious. The message they're sending to investors everywhere is be aggressive. Invest in the future. We want you to take the risks needed to build a world-leading AI economy right here. So what's their master plan? Well, at its core, it's about being a catalyst, not the bank. The government's goal isn't to spend a bunch of taxpayer money on data centers. No, their job is to create the absolute perfect environment to attract tens of billions in private money from giants like Microsoft to come and build that critical infrastructure for them. And here's how they're planning to pull it off. It's a really smart, multi-layered approach. First, they're deepening their tech partnership with the US. They're actively chasing that private investment. They're using the government's power to just slash through red tape for things like permits. And crucially, they're making sure these new jobs and opportunities spread all over the country, not just in London. And of course, they're leaning on their homegrown heroes like DeepMind and ARM to anchor the whole thing. So there you have it. We followed this one AI ripple all the way from a super complex financing deal in Silicon Valley to how you might design your next project, and all the way to the halls of government in the UK. The AI ripple effect is reshaping our world, that much is clear. So this leaves us with one final thought. The question is no longer if AI will change everything. The real question is who is going to be in the best position to ride that massive wave. If you enjoyed this explainer, please like, comment, share, and subscribe.